So we have a special guest lined up with us this afternoon. Ajit Gulabchand, the chairman of Hindustan Construction, now joins us from the sidelines of the IDFC annual India conference that we've been covering through the day. Mr. Gulabchand, good afternoon. Thank you very much for speaking to us on Closing Bell.
Good afternoon, Nanika. Tell me.
I hope you have good news regarding the economy, Mr. Gulabchand. You've had a good quarter that went by. Your results were good. Can you talk us through whether you're seeing even the first signs of a potential revival in the investment cycle?
Well, I see that in terms of optimism of good things going to happen is very clear. That yes, you see a government that is quite determined to make that happen. Is working on a variety of policy frameworks and reform frameworks to make the change happen. However, they have been confronted with the debris of the last government's bad policies that is still cluttering the change story or coming in the way of the change story. So they need to tackle that. There's still a lot of monies to be paid back to infrastructure companies. There is still new rules and procurement policies to be created for concessions and concession agreements, as well as for construction EPC contracts. At the same time, there's the issue of payment to the industry has still to be sorted out effectively.
Okay, when you say effectively, Mr. Gulabchand, when you say effectively, we've spoken to you earlier, we've spoken to other people in infrastructure. One of the big problems has been the government payments getting stuck. So are you seeing signs that's going to come, that's going to improve?
See, I'll tell you, as I see so far, they were confounded by the problem, unable to see how to do this, afraid to act because it's about giving away money. However, they are now seeing that without declogging this, we are not able to go ahead. So I expect a month or two will see a lot more constructive and new ways of solving the problem. This is how I'd put it. Okay. Because they're realizing that most of this is coming in the way of the change they want to deliver. Take the company law bill, for example. It's a disastrous bill. Nobody can do serious business under that. There are such issues that are coming in the way which they will have to declog. They'll have to amend this act. They'll have to amend the land acquisition bill. All these are now underway. As you can see from today's announcement on environment, they're talking of a sensible way to manage the environment by giving clearances in a more transparent, effective way where everybody knows where they're going. So I think they're on the right track, but they're not there.
Mr. Gulabchand,
for me to say that it has happened.
Yeah, fair enough. Can you give us your assessment of when you think, given that you believe that the government is doing all the right things, when you expect the investment cycle to start picking up realistically, a sense of, how many quarters away are we from that pickup in the economy?
I think, I personally believe it will depend on the sector to sector, but still so far no real new investment has happened. But projects are getting announced by the government for the first time in 2 to 3 years, and that's a good sign. So I would expect that anywhere between 6 months to another year, it would take for government to declog the thing to move forward.
6 months to a year for new projects to start coming in? Is that what you mean?
Yes, yes.
So that would mean at least a year and a half to 2 years for any of this to start showing up in the financials of companies like yours, sir?
See, financials of companies have a slightly different matrix in terms of everybody has become leaner due to the bad period, and they're likely to show better results to some extent. But when you talk of investment climate, when you talk about actual investment and a serious growth happening in the economy, then yes, it will take that much time.
Amongst the
lot of talk will be there.
No, sorry, sir, but amongst the various infrastructure sectors that you all work in, where are you seeing the signs of a pickup first? Would it be maybe in the most beleaguered sector of power? Do you see that come through maybe in roads? Can you give us, some insight?
Hydropower, roads. Now, when it came to fuel-based power like coal and gas, because of the coal mines disaster, there was a problem. But the government has acted quite swiftly in passing that ordinance so that you can get back to mining as quickly as possible. But even that is not going to happen right away. It's going to take another year to happen. So, but the fact is that they have acted. So a year later, you are sure that it is going to happen. So you can see a lot of things in action, but not completed enough for it to have a direct impact on the actual investment or actual growth.
All right. Mr. Gulabchand, the last time when we spoke to you in detail, you had brought up this issue of pending payments from the government. You've clarified today that none of those have come through as yet, but you're hopeful. The other issue that you had brought up is certain asset sales to be able to deleverage your balance sheet. Have you had much luck in that?
Yeah.
And can you talk us through what the program for that is here on?
I would have liked to say that I would have liked to see a better result of asset sale till now. We have not been able to do that well, but we are still on track. So as per our original plan, but it has been a difficult period, but I expect some improvements will now come as the sentiment improves in the economy, which has distinctively improved. I'm not talking about only optimism now, because like new projects seem to be on the way. You know, Menaka, that the visible order book of infrastructure industry just till 2 years ago used to be at about $110 billion a year at the beginning of the year. It has dropped to less than 30. Now that is beginning to show some signs of revival. It's not gone to that original figure, but it is moving in the upward direction, and I think that's a very healthy sign, because that's the first sign that projects are going to happen. So far, the projects were not happening, the money was stuck, and there was nothing inside that said this is all going to happen quickly. That has gone. They are working on it, you can see that. I think the money problem is very difficult given the climate in the country, but they will find a way when they really know that they can't go beyond without solving this.
You were expecting to raise roughly between 500 to 700 crores, sir, in this financial year through asset sales. I don't think you're. Have you found, sort of takers?
It's not been easy, is it? It has not been so easy so far.
Sure.
But we still hope we could be able to keep the targets.
By the end of this fiscal itself, sir, or are you stretching it out a bit?
Well, I can't tell you to the minute, but if you want, we can probably talk about 11:30 on May 2015.
Okay, all right. 11:30 on which day of May, sir, did you specify?
How much of these asset sales will you have to go through? I mean, if the money that the government owes you should come, say, in the next 3 months, will you pay down your target for asset sales?
Hey, listen, the whole idea is the asset sale is not for selling assets. It is for reducing the debt.
Okay.
So if there is a windfall from somewhere and we can reduce the debt, why would we sell the assets?
We spoke in June, sir, and
we might still sell them.
If you get
we might still sell them, but it's not the whole objective is to deleverage. It is not to sell the assets. But having looked at sale of assets, we might find it interesting to sell it anyways.
So, sir, about the CDR process, we spoke in June. You said you had about 8 years to pay back over 3,500 crore rupees. Given your current assessment of how long it will take infrastructure to pick up and when it will start reflecting in the bottom lines of companies like yours, would you think you'll be able to exit that CDR process in the accelerated fashion of 2 to 3 years or 4 years, or do you think that could now stretch out and maybe you'll take all 8 years?
I think that you could be reasonably right on that, because I'll tell you, even today with a huge interest burden, we are still able to make profit. So if we can deleverage even a little way, we would be able to have very good profitability. So the kind of timeline you put should be all right. I think it looks doable.
Which one, sir? The 3 to 4 years or the full 8 years of exit?
No, 3 to 4 years.
All right, fine. That's what you told me in June, so you're maintaining that. So your optimism hasn't flagged at all in the last 3 or 4 months. One of the things that
we'll talk again at 3:25 p.m. on May 21st.
No, I have one more question. I can't let you go without talking about the Lavasa IPO. It seems you do have all the SEBI clearances in now. Can you give us a sense of what the potential timeline of that could be? Because that, again, fits into your entire deleveraging plan.
We've got the clearance now finally, almost towards the middle of November. We will now sit back and take out which is the most appropriate time to go IPO, because it's not so simple. We have to look at timelines. There are periods in which profit taking takes place, then there is a budget of India in the offing. A whole host of circumstances will have to be taken into account. Our merchant bankers have to advise us as to which is the best period to go forth. And in accordance with that, we will take the right decision. I can't put an exact timeline on this.
Maybe not an exact timeline, but I'm guessing between now and May 25th at 11:30 a.m., right?
No, don't fish, don't push.
Okay, but there was anticipation that your IPO would come through before the end of this calendar year. You're saying that you can't quite commit on that.
Yeah, but no, that's not possible, because it came a little too late, the clearance.
Okay, so it's more likely now in the calendar year of 2015, sir.
Yes, that is right. You got your answer. Let's not put a time of hours and seconds on it. That's
all right. No, I'm not trying to do that. Mr. Gulabchand, always a pleasure to speak with you. Thank you so much for the time today.
Always. Thank you.
Thank you very much, sir.